Good afternoon, dear investors, analysts, and the shareholders of PTC India Limited. It is indeed a pleasure to be with you this afternoon, yet again, with the third quarter results. You might have gone through both the results published by PTC India Limited and our press release, where we have given you some brief on how we have perceived our business this quarter. Let me tell you, 9 months, your company has done very well, and we are growing both in terms of margin as well as the operating profits. As far as this quarter is concerned, again, let me reiterate that the numbers are strong and the operating margin from sale of electricity is 7% above what we have done year on year last year. And then the million units sold is 4% less than the previous year, but overall in 9 months we have grown again in this number. Let me just once again, although this is not part of the third quarter result, but in the month of January we have a robust growth once again, and we have reported in Form 4 to the Regulatory Commission there. So we can once again confirm to our investors and analysts that the performance of the company as far as the trading business is concerned is going well on track. Couple of things which you might have noticed is, one, the reduction in our surcharge income, and we have reported it in our income that compared to almost 58 crores last quarter, the quarter which we are corresponding quarter, we have reported 16.63 as the surcharge number, and there is a reduction of around 42 crores on this. Let me just inform our valued investors and analysts that this is a rolling number and the surcharge is calculated on the annual basis, and what we really accrue during this quarter is reported here. So therefore, this number, although is reported somewhere in the bottom line and can reflect in the final number, these numbers are rolling numbers, and we are very confident that whatever we have targeted for our surcharge earning, we will be meeting those targets at the year end. The second important aspect which I would like to share and which we have reported in our results are that as a prudent accounting measure, we have provided for 67 crores in the value of equity stakes in one of our invested company, that is Sikkim Urja Limited, to account for the natural disaster which happened in the month of October 2023. Let me just once again reiterate that though we have full faith in the long-term value of the project under the Sikkim Urja Limited, and we have our value intact there, but as a prudent accounting measures, we have taken this provision. This project is very important for us in two ways: that we have a small investment of around 5.6% of the total equity, and we have a 840 megawatt of a long-term PPA with 4 of the states, and we are confident that we will give you a good news soon when the project will restart generation and we will be in a position to supply to those states. Related to other areas where we are operating, let me just tell you, both the subsidiary company has done well. The generation in PTC Energy Limited has exceeded what we have done in the similar quarter last year, and we are confident that this kind of performance will continue in future as well. Related to PTC Financial Services, we have maintained our profitability in that organization, and the last but not the least, the newest one, our associate in HPX, we are doing well, and I would like to share one very important development in this regard, and that is something which you all have asked me and expected this to happen in the past. The Central Electricity Regulatory Commission has allowed a pilot project for market coupling to take place in the grid India, and they are expecting the result to be submitted to regulatory commission so that this market coupling can be enabled for all the three exchanges and the market can be coupled. So this is a very important development, and then that can lead to a very positive outcome for the company and our investment in the HPX. What I have maintained in the past, that the trading mix should be around 50% from long term and medium term, and around 50% from the shorter term. Although slightly we are skewed towards a shorter term this year, but we have maintained a very good mix during this quarter as well. I have maintained it in the past that our core focus is to increase the trading margin, and we have maintained, or rather increased, our trading margin to 3.52 paisa per unit, which is substantially higher compared to the previous quarters. And we are maintaining our position that those trading volumes which are not giving the company the right kind of returns are need to be seen. And if the cost of servicing the customer is more than the margin we earn, we are not very keen to take those kind of transactions. And we have maintained that strategy in this quarter as well. So with these opening remarks, I'll be available for answering other questions. But with these opening remarks, let me hand it over to my CFO, who will give you the brief and the exact numbers, what we have achieved during the quarter and 9 months. Mr. Pankaj.
Thank you, CMD sir. Good evening to all of you. Now I will go through the financial results for the quarter and 9 months ended December 23 on a standalone and consolidated basis. First, I will go through the financial performance on standalone basis for the quarter. So in the quarter, volume has decreased by 4% to 14.9 billion units from 15.5 billion units. As CMD has already explained, the slight fall in the million units is due to two factors mainly. One, that due to damage of our Teesta project, which has given no generation in this quarter. And second, on account of lower import of power from Bhutan. So these are the two main factors. The total operational income has decreased by 23% to 109 crore from 143 crore. Although, as CMD has already explained, our core operating margin has increased from 3.43 paisa per unit to 3.43 paisa from 3.09 paisa per unit. But the total operational income has gone down due to surcharge, as sir has already explained. So likewise, the profit before tax has also decreased by 19% to 85 crore from 105 crore. PAT has decreased by 19% to 63 crore against 78 crore in the corresponding quarter. The total other comprehensive income has decreased to -4 crore from 77 crore in the last quarter. So the total other comprehensive income has already been explained, that due to damage of our project to Sikkim Urja, due to flash flood in Sikkim arising out of a cloud burst. Accordingly, an estimated reduction of 67.49 crore in value of investment has been accounted for in other comprehensive income. Earning per share for the quarter stood at rupees 2.12 as compared to rupees 2.63 for the quarter. So now I'll go through the 9 months results on a standalone basis. So volume has increased by 5% to 56.8 billion units from 54.2 billion units. Total operational income has increased by 5% to 422 crore from 401 crore. So as sir has already explained, our core margin has increased to 3.52 paisa per unit from 3.28 paisa per unit. Profit before tax has increased by 28% to 371 crore from 289 crore. Profit after tax has also, in the same lines, has also increased by 33% to 286 crore from 214 crore in the corresponding quarter. Total other comprehensive income has increased by 2% to 218 crore from 214 crore. Earning per share for the 9 months stood at rupees 9.66 as compared to 7.24 in the last quarter. Now I'll go through the consolidated results on a quarter basis. So volume has decreased by 4% to 15 billion unit from 15.6 billion unit. Profit before tax has decreased by 8% to 131 crore from 142 crore. Profit after tax has decreased by 7% to 97 crore from 104 crore. Total other comprehensive income has decreased by 72% to 29 crore from 104 crore. Earning per share for the quarter stood at rupees 2.68 as compared to rupees 3.1. Now I'll go through the 9 months consolidated results. Volume has increased by 5% to 57.3 billion unit from 54.6 billion unit. Profit before tax has increased by 17% to 594 crore from 509 crore. The profit after tax has also increased by 17% to 442 crore from 378 crore. Total other comprehensive income has slightly decreased by 1% to 373 crore from 378 crore. Earning per share for the 9 months stood at rupees 13.2 as compared to 11.11 in the last 9 months ended. Thank you.
Should we begin the question and answer session?
Yeah, please go ahead.
Thank you very much. We will now begin the question and answer session. To ask a question, please click on the Raise Hand icon tab available on your toolbar or on the QA tab available on your screen. You may also post your text questions on the Ask a Question tab available on your screen. Kindly turn on your mic when the operator announces your name. Ladies and gentlemen, we will wait for a moment while the question queue assembles. We have a first question from Preet Nagarsheth from Wealth Finance. Please go ahead. He has exited the
Please go
meeting.
ahead.
We'll take the next question from Shivan Sarvaya from Humiviction Investment Advisors LLP. Please go ahead.
Hello, am I audible?
Yeah,
Yes.
you are. Please go ahead.
Okay, thank you for the opportunity. Couple of questions.
You're not very clear though, Mr. Shivan.
Bit louder.
Hello.
Can you speak a bit
Is this
louder,
audible?
please?
Hello, is this audible? Hello.
We can hear you,
Hello.
but the volume is little low.
Okay. Okay, I'll just say my couple of questions. So the first question is, sir, what would be the additional provisioning that would be required to be done for Sikkim Urja?
As far as the Sikkim Urja is concerned, actually, let me share with you the current development. The project has area is under maintenance, or they are going to repair it, and they have entered into the main building, and all the equipments are intact. The power plant is intact, and the other areas also they are trying to repair as early as possible. So all the information what was available to the company and the management, they have done provision of 67 crore, and we don't expect anything else at this point of time, whatever information is available with us.
And so the other question that I had is that when we see the power sector which is growing, but when we look at our volumes, we don't see that in our volumes. We see degrowths. So what is the exact reason for this?
No, exactly. A CFO has explained there are two factors where we have seen the volume in the third quarter not growing to the expectations we had. But again, in the month of January, as I suggested, we have a growth of around 19% in the volume. So if you compare the growth of the market as well as the power sector, we are almost doing we are at parity or maybe slightly higher.
Okay. Okay. Thank you, sir. Thank you very much.
Thank you. We have a next question from Rohan Desai. I'm sorry, he has exited the meeting. We'll take the next question from Suraj Navandar from Prithvi Finmart Private Limited. Please go ahead.
Hello.
Yeah, Prithvi,
Yes,
please
we
go
can
ahead.
hear you.
Yeah, hi. So my question was on the MBED, how it will benefit us because sorry, my question was on market coupling, not the MBED. Uh, when the market coupling will be implemented, the job of an exchange will remain only to procure the buy and the sell bids. So what differentiation will be there between IEX, HPX, or third exchange?
Yeah, exactly. Your question is to the point. I mean, we are saying that based on the service what you render to your clients, the clients will choose the exchange, and not because you are having the first exchange, you are the customers are sticking to it. So with the price discovery being transferred to Grid India, the exchanges will get the market or their share based on the service what they are rendering to the customers. And we are very hopeful that the third exchange, which is SPX promoted by PTC, will get its pie because of its differentiation in the services what we can render better than any other exchange. And as far as the value by the exchange, exchanges are known for the innovation, and they will have to come out with innovative products each time the customer wants it, rather than doing the price discovery where it can be done by anywhere else also. So market coupling is a good thing. What we expect is going to take place in this country soon.
Sir, in that case, let's say IEX has one product, or we introduce some new product, and let's say other exchanges don't have it. Then, how will the market coupling will work?
No, no, I
We
mean,
will be.
right now they have started with RTM, then they will shift to DM, day ahead market, where all the three exchanges are operating. If a exchange is having a unique product, then the other exchanges will not compete. That product will be sold only by that exchange.
Okay, okay. And how difficult it is to introduce a new product? Let's say we introduce a new innovative product. How difficult it will be for IEX or another exchange to just replicate that product?
No, again, I mean, if you have to customize a new product, you will be a pioneer in that area, and you will get the advantage. Just the way you are seeing IEX have a market share which is much higher than the two exchanges. So if somebody comes out with a new product, which others will be bringing new products, uh, you will find they will be the leader.
Thank you. We have a next question from Rohan Desai, an individual investor. Please go ahead.
Hello, am I audible?
Yes.
Yeah, yeah, please go ahead.
So, as an investor, I'm happy to see the upfront accounting disclosures as well as the points mentioned in the company notes, and we expect it to continue in near future. So, I have a couple of questions. So, first one is that when can we expect to receive the sale value of PEL sale to ONGC? And the second one is that how do we plan to further enhance the shareholder value?
Yeah, the first question is a very direct question. I can answer you straight away. That PL stake sale to ONGC is on track and things are moving. Uh, it takes a little time when you are doing the block deal or the entire stake on sale, and we have to uh, complete all the exercises before we call for the EGM for the shareholder. And that's exactly the position we are in right now, and we are very hopeful that in this financial year we'll be closing this deal. The second aspect is value addition to the company. I mentioned that we are looking forward to the new products which we are trying to introduce, and it is not only the investment we had in HPX, but we are also trying to find out new innovative products where the company will have its niche.
Okay, okay, thank you so much.
Thank you. The next question is from Prashant Kalpade from ISG Securities. Please go ahead.
Hello.
Yeah, please.
Yes, we hear you.
Thank you for the opportunity, sir. I have two questions. My first question on why does PTC India consider existing the power trading business when distribution discoms have to the option to purchase power directly from discoms? And my second question is, what are the benefits the Gencos drive from trading with PTC India and similarly discoms?
No, intermediaries are globally recognized as the driver for the market. And if I need to explain why intermediaries or a power trader or a solution provider is needed, that is a fundamental question you are asking. But let me assure you that PTC has added a lot of value to its customer, both buyers and sellers in the past, and we continue to do that. And we are market leader, and we are very proud to say that the power market today, what it is today, uh, is created by PTC. We are the first power trader, and we are the first promoter of the first exchange of the country and the third exchange of the country. And need not to mention that the drive what we have, or 12 or 13% of the market share this power market has today, was initiated by PTC, and it will continue to grow in future as well.
Okay, sir. Thank you, sir.
Thank you. The next question is from Preet Nagarsheth from Wealth Finance. Please go ahead.
Yeah, Preetji, please.
Yes, sir. Yes, am I audible?
Yeah, you are very much audible. Please go ahead.
Okay. Sir, the question I had is that once you receive the proceeds from ONGC within the financial year, the transaction gets completed, what are the plans to utilize the equity component of that proceeds?
Preet, your question is very relevant, and I have replied this question in the last analyst call also. Here, I would like to repeat that we have a clear written down dividend declaration policy, so the investors can get benefit from our such kind of a policy, and the decisions taken in favor of the our shareholders. But important thing is the business is growing, and so are the new products which we are thinking of. Once it is these things are being planned at the strategy level. Once these things are finalized, we will declare what we have in our mind when we are investing in anything which is for the business growth. But important thing is everything is well planned, and the capital allocations we are trying to do so that once we get this equity return, we can deploy at the most profitable places and for the benefit of our shareholders.
So, sir, should we expect, given that next year is the 75th year for the company, should we expect 20 to 30 rupee dividend coming our way from these proceeds? Is that a possibility?
Preet, asking a very interesting question, but you yourself must be knowing that it is very difficult to answer these kind of questions. But I said that we will keep in our mind the importance of shareholders and for the welfare of anybody who was with this company for a longer period, for long 25 years. If the shareholders are with us, we do take care of their interest.
Great. Thank you so much, sir.
Thank you. We have a next question from Karthik Muthuswamy from Trident Advisors. Please go ahead.
Yeah, Mr. Muthuswamy.
Mr. Muthuswamy, your line is unmuted. Kindly turn on your mic and go ahead with your question. Since there is no response, we'll move on to the next question from Vishal Mehta from Wealth Guardian. Please go ahead.
Hi, sir. Am I audible?
Yeah. Vishalji, you are very much audible. Please go ahead.
Sir, I just had three questions. First question is, over the last 2 year ends, we've had about 490 crores and 870 crores lying in the current account. Now we are losing on the interest income. Is this because of poor cash management, or there is some business need which is forcing us to do this?
Anything else, Vishalji, you have
Yes.
to ask?
The second question was related to the market coupling. Now we know that HPX is going to benefit out of it, but what will be the impact on our standalone trading business? And one more question, if I can squeeze in, is that, do we have any plans of stake sale in PFS at all?
Yeah, I'll answer this in two parts, the second and third question, and then I'll hand it over to CFO to answer the first part. About the treasury management, CFO will be answering. For the second and third question, let me tell you that the HPX is going to get the market share for the exchange related business, where we have decided that if I have already mentioned that if the cost of service is more than our earnings or the margin, we are not undertaking that. That means we are not losing any business if it even if it goes to the exchanges. The second part, what you asked, is the market coupling part. HPX certainly will be get the benefit of it. And what was the third question you said?
PFS.
PFS. PFS, we have already mentioned that we have not decided that we are not going to sell the stake. It is on pause. We can take one at a time. So PL is in advanced stage, as you all are aware. Then there are two other things which we have in the pipeline, including the stake sale and PFS. At the appropriate time, we will share with you that what the decision of the board is and how we are going to take it up. Now I hand it over to CFO to answer your treasury management part.
So you are right that for the last 2 years, you are in the balance sheet on a closing date of 31st March, you may be seeing the balances in our current accounts or other investments. But as you know that for every business to grow, we need a working capital. So whenever we deploy it means that we at that point of time there was cash. But as soon as if the cash is reducing, so that is a good sign that it means our business is growing and more working capital is being deployed in the business which we are doing. And as far as the return is concerned, that on fixed deposits you may be knowing that we may be earning around 6-7%, but as we deploy our business money into the business, so we get an instant rebate of 2%, and we also earn some sort of a surcharge in case there is a delay of 15%. So if you analyze that 2% rebate, we are earning at least 24%. So that means our working capital means that there should be less and less cash in our balance sheet. And so that is the point which I wanted to explain regarding the cash availability.
Mr. Mehta, does that answer your questions?
Yes, ma'am. Thank you so much. Thank you so much, sir.
Thank you. The next question is from Vipul Kumar Shah from Sumangal Investment. Please go ahead.
Hi, sir. Thanks for the opportunity. So my question is, you said that surcharge is a rolling item. So can you give the guidance for surcharge for entire financial year? Although surcharge income has dipped in this quarter, but what should be the approximate surcharge figure we should work with?
Vipulji, I have mentioned that when I say that surcharge income is accounted for on accrual basis. Once it hits your account, we generally take that into our account. So that's exactly the meaning what I meant. And when I say that it is a rolling thing, means whatever is outstanding, if it is the surcharge income is accrued on that will be taken into account. Giving guidance for fourth quarter or for the annual number will not be prudent, and I would not like to go into that area.
And sir, my second question is regarding the benefits out of this coupling. So you have said that it will benefit us, but if you can briefly explain how it will benefit particularly trading business of PTC.
When I was saying that market coupling will benefit us, means we have promoted the third power exchange, where we have almost 24% of stake, and we are the major promoter of that exchange, and that is in the nascent stage right now. It started operation just almost 14-15 months back or 18 months back, and the initial months are encouraging. And we expect that this can give a real good fight to the first power exchange, that is IEX in the country, and will get a major market share in the exchange business. So our investment in that exchange, we are expecting to give us a good return in future, and that's the reason why I said it is important investment for us, and it is going to benefit the company. As far as the trading business is concerned, the growth of exchanges give a different kind of products in the market. Bilateral market will always remain, and it will have its own importance, and trading will continue in the form and format, which will keep on changing in due course of time. with the evolving market.
What is the current market share of HPX?
HPX in some of the segment, they have almost 1/3 of the market, and in the area where there is liquidity issues, they have a lower market share where they can improve with the market coupling, and they expect that at least 1/3 to half of the market share should come to that exchange.
And so lastly, can you quantify what should be our margins from long-term and medium-term deals and short-term deals? Because in your presentation, the figure given is blended one.
We will clarify just a minute. I mean, in the long term, what is the margin, and in the shorter term, CFO will clarify what is the margin currently we have for 9 months as well as for the quarter.
Just a minute.
एक मिनट चालू रखिए, नवो ड्राइवर છે જરા એને સમજાવો ને.
Yeah. So for the quarter, in our short-term trade, our trading margin was including the bilateral trade in short term and the exchange part is 0.84 paisa, and for medium term it is around 1.72 paisa. On a long-term trade, it is 7.38 paisa.
For 9 months also you.
So, and for 9 months also, sir, just a minute. For 9 months for December 23, on a short term, including bilateral and exchange, it's 0.75 paisa. For medium term, again, it is 1.73 paisa. For long term trade, it is 6.99 paisa. An average is 3.52 for December 9 months.
Vipulji, I think we have clarified your
Yes,
answers.
sir. Yeah, thank you, sir.
Thank you. We'll take some text questions now. The question is from Suraj Navandar from Prithvi Finmart. How much is cash balance on balance sheet as on Q3 FY24? Have we received money from ONGC? How we are planning use cash balance?
So as regards the first question, our net cash balance as on 31st December was around 530 crores.
And regarding the ONGC sale, we clarified that the deal is yet to be completed, so no cash has hit to PTC till this entire transaction is over. So, and the deployment of once we get the equity portion of it, we'll let I have already answered this question. We will let our investors and analysts more details on this.
Thank you. Next question is from Rajesh Shah from Sayaji Industries Limited. What is the progress in sale of PTC Energy, subsidiary of PTC India Limited? Do we require the approval of shareholder? When are we planning to get the same? Are all other conditions fulfilled?
Yeah, so first question we have already answered. So second part is yes, we require shareholders approval, and we will come to for the notification of the shareholder EGM as early as possible. And the third is once that is done, we are in the final stages of completing all the condition precedent, and once that will be complete, we will go for the notification of the EGM.
Thank you. Next text question is from Narendra Kutia from Robo Capital. What was the revenue and PAT for HPX for this quarter as well as 9 months FY24? And what are our plans for HPX for the next couple of years?
So as regards the HPX revenue for the quarter and 9 months, for the quarter, their revenue from operations was around 6 crore, and for 9 months, their revenue from operation was 27.46 crore.
As far as the future plan of this company, we have already shared with you in previous calls. But to reiterate the thing, we want it to be the most innovative, the most modern, technologically advanced exchange, with the backing of the 3 of the most reputed institutions in the country, that is ICICI Bank, PTC India Limited, and Bombay Stock Exchange. And the present infrastructure, what has been created for this exchange is one of the world class, both in terms of the hardware and software. And last but not the least, the service delivery, what we have seen in last 18 months is also far superior compared to other exchanges. So we look forward and to the market coupling, a better price discovery in the market, and level playing field, so that this exchange can emerge as the number one in the country.
The next text question is from Dungar Kasundra. As per Q3 results, PTC India has some plan for sale of PTC Energy for 900 plus crore and instructive value 2200 plus crore. What would result as profit or loss and amount thereof?
At this point of time, let this figure hit our accounts, and then we will be in a better position to share with you what is the profit loss, because at this point of time, it is prudent not to answer, which is like a hypothetical question at this point of time.
Next question is from Ragini Pandey from Elara Capital. Short-term volumes traded on PTC is roughly what percentage the total volumes traded on the exchanges? And second question is, can you share the financials for HPX for Q3?
Financials of Q3, I have already explained that for the quarter, revenue from operation was around 6 crore, and the HPX profit before tax was around 8 lakhs. For the 9 months ended, their revenue from operation was 27.46 crore, and their profit before tax was around 9.92 crore. And as regards the share?
Yeah, the percentage of
53%. And as regards the exchange percentage in our total volume, it accounts for around 53% of the total units we have traded in this quarter. And short term is around 6.
Thank you. We have a next question from Manoj Pandey, an individual investor. Please go ahead.
Hello, am I audible, sir?
Yeah, Manoj,
Yes,
you are
please go
audible.
ahead.
Please go ahead.
Yeah, sir, my question is regarding PTC Financial Services.
Yeah.
Sir, business-wise, the company is looking very bad, although it had some problems, of course, recently. But in last 5 years, 5 years back, it has a book size of 13,500 crores. Now it has declined to almost 6,500 crores. Despite a strong team deployed over there, and no visibility is being seen when we go to the investor meet over there. They say that the company's parent company is planning to deploy a CEO over there, but no concrete answer is being given. What is your plan about PFS, sir? How the company can recoup its business and go in a growth momentum phase? Currently, its book size is falling every quarter since last 5 years. How you can correct this asymmetry with your this subsidiary?
Manoj, I mean,
Please.
generally we say that the listed companies, the questions related to PFS are being answered in the analyst call in PFS. But as because you are asking as an investor in PTC, let me tell you that we keeps at arm's length. We have a major investment in that company, and the company in recent times have met all the regulatory requirements, and they are trying to revive their business plan so that whatever your worries are can be taken care of. As far as the regular management is concerned, recently there are major 3 or 4 senior level induction in the company, and they are planning to get a full-time MD and CEO soon. So this is what I can share at this point of time. As far as their business growth and plan and strategy, I think the company will be in a better position to answer you.
But sir, you as a parent company, you must be monitoring their performance. So why didn't your company had been taking action in last 5 years when the business was dropping from 13,500 crore to 6,500 crore, sir?
No, no. I mean, let me tell you, the company is having a close watch, and it is being monitored, and it is also being seen that the growth of that company should start from here on.
Thank you. The next question is from Channamalu Halagodi, an individual investor. Please go ahead.
Thank you for this opportunity. Am I audible, sir?
Yeah. Please go ahead.
Sir, I am the very serious investor in PTC India company. On the basis of
Thank
that, you will you are concentrating mostly on your core business. I invested in your company. I bought 7,500 shares. As a small investor, I bought 7,500 shares. So, but since 3 to 4 years, I'm observing that the divestment of PTC India Financial Service is lagging behind. So, what time frame we will take to complete the divestment process of PTC India Financial Service, sir?
As I just mentioned in my earlier answer, that we are taking it one by one, and PTC Energy is at the advanced stage. Once that is complete, we have never mentioned that we are not going to take it up, but we have put on pause or on hold the divestment of PTC Financial Services, and we will announce the divestment once this process is complete and it is cleared by the board.
You are serious in this divestment of PTC India Financial Service?
I know. We appreciate your concern, and we know that you are a serious investor, and whatever you say today it means a lot to us.
Okay, thank you, sir.
Thank you. The next question is from Karthik Muthuswamy from Trident Advisors. Please go ahead. Mr. Muthuswamy, please go ahead with your question. There is no response from his line. We'll take one text question from Vipul Kumar Shah from Sumangal Investment. This question was raised by one earlier participant also. When power is available on exchanges, why any discount should you give? Why any discom should you give you spread of 3 to 4 paise? What benefit they got by buying power through you?
Again, exchanges are providing power to a customer for a much shorter period, and you must have seen that the fluctuations in the power prices in the exchanges are very significant. Whereas for a bilateral contract, it is much stable, and globally also it is seen that a part of their total power procurement they do only from the exchanges, and rest it is done on a bilateral basis uh, for keeping the portfolio stable. So intermediaries and trading companies are relevant throughout the world, and it will continue to be relevant in Indian context as well.
Thank you. Mr. Karthik Muthuswamy, your line is unmuted. Can you go ahead with your question? Can you send a text question, please? Because we are not able to hear you. Thank you. As there are no further questions, I would now like to hand the conference over to Dr. Rajiv Kumar Mishra for closing comments. Over to you, sir.
Thank you very much. And all the questions what we got today from our investors, analyst friends were very insightful, meaningful, and were given a lot of insights to us for our further course of business. We all take all your advices, your questions very seriously, and we would like to get it implemented for our future business. Let me once again reassure you that the entire top management of PTC India Limited is working for the benefit of our shareholders, and we would ensure that the interest of shareholders is of highest priority for the company. Thank you very much.
Thank you, sir. Ladies and gentlemen, on behalf of PTC India, that concludes today's session. Thank you for your participation. You may now exit the meeting.